Hello, everyone. Welcome, and thank you for joining us. My name is Tiffany O'Neill, and I'm the Executive Director for the Sonoma State University Alumni Association. Thank you for joining us for today's webinar, Weathering a Financial Storm, Tips to Strengthen Your Financial Standing During Trying Times, which is co-sponsored by Redwood Credit Union and the Sonoma State University Alumni Association. Before we begin, I want to share a few quick housekeeping updates with everyone. Today's presentation is being recorded and will be available to you after the program. The presentation, along with a post-event survey, will be emailed to you this afternoon. We'd appreciate you taking a few minutes to provide your feedback through our survey about today's content. Both the chat and the Q&A features are enabled during the webinar. As you think of questions related to our presentation today, please go ahead and get them to us in the Q&A feature. We'll have time at the end of the presentation to answer any questions that come through. Also, we'll be sharing our speaker Ren's contact information for any follow-up questions. If you have any comments or technical issues, you can also input those in the chat feature and we'll try to troubleshoot them as we can. I'd like to acknowledge this program was a collaboration between Redwood Credit Union and the Alumni Association. Redwood Credit Union is a wonderful partner with Sonoma State University and provides many opportunities to broaden the knowledge of financial wellness for our students, alumni, prospective students, faculty, staff, and our community. I'd like to personally thank Redwood Credit Union for their collaboration and partnership in providing our community with financial wellness tools and resources. I'd like to now introduce our speaker today, Ren Valentine. Ren is a financial wellness advocate with Redwood Credit Union and a 2007 Hutchins alumna of Sonoma State. She has over a decade of knowledge in this space and just is a wonderful resource for all of us. She has been on and continues to come back to campus to share her knowledge around personal finance wellness with our staff and faculty, our freshman year experience classes, our academic talent search program, and our EOP summer bridge students. Currently, Ren is proud to be working on developing curriculum with our School of Education to provide future teachers with the know-how to implement personal finance education into their high school classrooms in the future. Thank you, Ren, for your time and collaboration on today's program, and I'm excited to turn the program over to you.
Thank you, Tiffany. Hello, everyone, and thank you for tuning in to Redwood Credit Union and Sonoma State's webinar, Weathering a Financial Storm, Tips to Safeguard Your Money. As Tiffany said, I am Ren Valentine Reynoso, Redwood Credit Union's financial wellness advocate and proud SSU alum. So thank you for having me back. Since 1950, our CU has been proudly serving the communities of the North Bay with a mission to passionately serve the best interests of our members, employees, and communities. We're honored to be invited to speak to you today in these, yes, unprecedented times that we all find ourselves in. So with that, let's go ahead and dive right in. Even when it seems like we're doing all that we can to be financially responsible and plan for the future, some things we just never see coming. Whether you're feeling added stress due to job loss, income reduction, surprise medical expenses, or some other financial pressure, first thing is to know that you are not alone. And if recent events have taught us anything, it's that a nationwide health crisis can quickly evolve into an economic one. Today, we'll be sharing timely insights and information to help you weather a difficult economic climate and set yourself up for a brighter future. We'll start off with detailing steps to a successful budget. We'll break down how to to build an emergency fund. After that, and cover convenient ways we'll wrap up with how your bank or credit this uncertain time. And so budgeting. Already follow a budget? Now is definitely the time to start. On the other hand, maybe you've had a budget for years. This is likely a good time to revisit that budget and make sure it's reflecting the life you're currently leading. Let's talk through 7 simple steps to help you develop, update, and implement your plans. Oh, I'm getting some feedback that I'm freezing a little bit. Let's see. Sorry, I just want to make sure that I don't continue on. Let's see. All right, everything's looking good on my end. There we go, thank you. All right, so let's dive into that budget. So, whether you are developing a new budget or updating an existing budget to make sure that it's working in current times under your current life situation, first, you want to determine what's most important or essential to the people involved in your budget, likely your family, and then make decisions based on those factors. Your values, what's important to you and the people that you support are first and foremost within your budget, those priorities. Next, you want to set goals. Goals can include things like saving money for an emergency fund, which we'll be touching on in a moment, or simply covering your weekly grocery bills. It might even be next year's vacation if you're lucky. Whatever your goals are important to you. And so that is what is most important. Work on your most important goals first, whatever that might be for you. Next, make sure to determine your income. This may have changed recently, so take a moment to figure out your net pay, which is the money that's left over after deductions. This is one area that many people fall down on. They don't take into consideration the changes to their income, how it's changed over COVID, how it's changed over your last maybe raise or review period. Take that all into consideration. Take a moment for yourself to really evaluate what your income is, because it matters. Our 4th step is to analyze your expenses. Take a good look at your monthly expenses. With those monthly expenses, are there any subscriptions or memberships that you might be able to cut? During a financial emergency, focus only on absolute needs. Another way to do this is to write down everything that you spend. Everything. For 1 day, and then 2 days, and then a week. At the end of that week, look at all of the money you've spent at all the different places for all the different purposes, and you can then evaluate and truly analyze the way that you spend money. Is it a need? Is it an absolute need in this time of potential crisis? Or is it something that you just need to be more conscientious of moving forward? So then, we suggest creating a plan. Designing a spending plan that works with your income and allows you and your family to have what you need right now is paramount. Doing all of this inward thinking, it's all for naught if you don't put it into some kind of action with a plan. What do you see for yourself? How do you plan to get there? Along the vein of what I just said, step 6 is to continue tracking your expenses. Keeping that spending record so you can see where your money is going if your plan that you've set out for yourself is working. Over time, you'll continue to notice trends and learn a lot about yourself potentially, and address areas that you could or you actually need to cut back on. Lastly, make sure to evaluate your plan. Periodically review that spending plan and make adjustments as needed, especially if your goals or income change. Don't take the need to evaluate and adjust your plan as a failure. Budgeting is a learning process. It's even at the times where we feel like we've failed, make it so that you fail forward, so that you learn from the experience and you can adjust and move forward in a meaningful and valuable way. That way, it's not a waste of time. It's learning, it's growing. By reviewing your finances and developing a spending plan, you'll feel more in control of your financial future, helping you reduce stress and reach short and potentially long-term goals. There are lots of tips and tools online for you to use in regards to creating and tracking a budget. So many. We do have some on redwoodcu.org that you are welcome to use 24/7 as you see fit. Now that we've covered tips on how to create a successful budget, let's move on to building an emergency fund. Okay. While it's impossible to know how long the current situation will last or how deeply it will affect your personal finances, when in doubt, play it safe and do what you can to start creating a safety net. If your budget allows for it, take immediate action to begin building up your emergency fund. This savings, this emergency fund, should actually be inserted into your budget almost as a bill that you're paying to yourself, that you're paying to your peace of mind. The earlier you begin saving in this emergency fund, not only will you have more peace of mind, but you'll also benefit from earning dividends through on the prize by setting a goal. While many experts recommend having 3 to 6 months of earning or of income, we recommend starting off a little simply. 3 to 6 months can seem like a lot. Save enough to cover 1 month's worth of expenses. Heck, even 1 week, that's something. Once you've reached your initial goal, save enough to cover 2 weeks or months, then 3, and so on. Really, whatever you're able to do, it's not about how much you save. Even if you only have a few dollars to set aside, it's important that you're consistent and making saving a regular habit. It's very much like a muscle. You have to exercise that muscle. You have to get that muscle memory so that even during hard times, you have this habit of putting money away to protect yourself and those you care for. You'll also need to choose where to keep your cash. A regular savings account is always a smart option, as you can easily access the funds if needed without any financial penalties. Money market accounts are also a great option, as the money is still liquid, but you typically earn a higher return. Do keep in mind that money markets, as slightly more sophisticated savings accounts than just a basic savings, there may be a minimum balance to maintain and potentially fees associated. So you want to make sure that you're aware of what those are before you engage in that type of account. Lastly, we encourage you to automate your savings. Use direct deposit or automatic transfers to get money straight into your emergency fund before you're tempted to spend it. Implementing a budget and building an emergency fund might seem like large, daunting tasks right now. With everything that we're dealing with, these can seem too large or even potentially too small. They get lost in everything that's coming down on us right now. But these things will help you move forward, both in difficult times and in really great times. Making small, doable changes in your everyday life can help you get on your way to accomplishing all your goals, small and big. And one simple way to start saving: making smarter choices at the grocery store, the place where a lot of us are spending more of our time, more of our money than 6 months ago. So let's take a look at some of those options. Of course, all non-essential shopping should be put on hold when you're facing a financial crisis. However, grocery shopping is, of course, an ongoing need, especially if you've got kids at home more than they ever have been before. They're eating their way out of your house and home. But there may be ways to lower your spending averages during this time when money is tight. At the grocery store, some ideas might be: use what you have. As you think about upcoming meals, check your cupboards. Try to plan a few dishes around food items that you already have on hand. Also, be aware of what you have. Are you finding that you have 3 different containers of mustard waiting to come out of the cupboard? Being aware of what you already have can save you money in duplicating what you've already got. Make a list. We all know how it goes. You get to the grocery store, hopefully you're not too hungry, and everything looks good. But impulse purchases can really add up, even if you're just tossing things into a virtual cart. Make your list, meal plan, and stick to that list. Throw brand loyalty to the wayside. Try out generic brands. You'll often find equal quality at a lower price. Check out different grocery stores than the ones that you usually go to. Even if you have to drive a couple miles further, that might very well pay off. Buy seasonal. The best priced fruits and veggies are those that are in season, and they taste the best too. When you're at the grocery store, especially physically, look up and down. Most grocers put store stock that is most pricey at eye level. Look above and especially below for cheaper brands, and try out new things too. Doing it yourself. While pre-cut fruit and grated cheese and all the like are very convenient, they also come at premium prices. You're paying a lot for somebody else doing that work for you. Purchase items whole and do the prep work yourself, and you'll probably see a couple of dollars discount per item. Go back to clipping those coupons. It seems like we all had a time in life where coupon clipping was something we did. You might have moved past that. Don't forget that. That is a skill. That is, in some ways, a really fun game. What can you find and how much money can you save? Browsing your store's weekly ad can save serious cash. Try building your meals around items that are on special that week. You'll find new and different recipes. Show your leftovers some love. Do your best to not throw anything out. Consider freezing portions of meals to reheat at a later time. And this doesn't just pertain to leftovers. You can always make more, double, triple your recipe. And that way you're buying more in bulk, which it tends to be a money saver right there in and of itself. And then finally, support your local businesses. When you can, purchase items from your locally owned grocers. You'll help out your community and your local economy. You'll probably get higher quality stuff, better tasting items. Meanwhile, supporting those that are sometimes dealing with the pandemic as best as they can, but still having a difficult time as compared to 6 months ago. So even with spending adjustments made at the grocery store and beyond, we understand that being short on funds is absolutely still possible. If you're able to make your usual payments on loans and other bills, we want you to know it's best to keep making those payments as you normally would. However, when faced with a financial challenge, it's understandable that you may need to evaluate your current debts and see where you could lower your payments. If you've been paying more than the minimum amounts on bills like your mortgage, your auto loan, your credit cards, etc., cut back and pay the minimums until you get back on your feet. It seems like a weird thing to say. Stop paying down so much of your debt. But at this time where you might be looking for every dollar you can, paying the minimums will keep you good. Paying those minimums will keep you in good standing. It's just not paying off as quickly as you might like to, but you can always get back there, okay? If the minimum amounts still don't work with your current financial situation, contact your creditors and lenders individually. Being proactive and honest will put you in a much better position to try to negotiate payment plans that will work for you. At RCU, we have a partner called Balance. They're available for complimentary help with financial counseling and one-on-one support to our members. Check with your bank or credit union to learn about what financial support options might be available to you through your financial institution. Either way, remember, financial hardships are absolutely nothing to be ashamed of. Many others are in the same situation. There is no stupid question. The only thing is wishing that you would have been proactive sooner. So that proactivity is key. As if you don't have enough to worry about already, the COVID-19 pandemic is also leading to an increase in fraud. Widespread fear and confusion, along with an eagerness and urgency to help others in need, create the perfect environment for dishonest individuals to prey on people of all ages. Keep these guidelines in mind to protect your finances. First and foremost, financial institutions and government agencies will never call, text, or email you to ask for credentials or other personal information. If you receive a call from an unknown source asking for these details, do not respond, please. If you have concerns and you feel like there might be some legitimacy, stop that current communication, look up the organization's number that the caller is claiming to represent of your own accord, and then you call to see if they need to contact, if they were trying to be in contact with you. Do your own research to verify that legitimacy of any individual or organization claiming to raise money for charitable causes. While there are legitimate fundraisers out there, social media is an easy target for fraudulent cases. And in this time where those of us that are able to be of assistance, we want to give, we want to be involved, we want to help. We can't let that yearning to be of help put us in a bad financial situation. Fraudsters are also posing as financial institutions, ones that are offering speedy funding on low or no interest loans. Never, never, never give out your personal information, and contact your financial institution if you need support. They do have departments dedicated to fraud and security and to help make sure that you are not a victim of that as their customer. Reach out to your financial institution. If something doesn't feel right, they will work on your behalf. If you're seeking employment, if you're currently unemployed and you're seeking employment, walk away from job offers that require you to purchase gift cards or merchandise, or to pay out of pocket for supplies or services to be reimbursed later. Think about it. Of your past jobs, have you ever had to purchase gift cards for a legitimate job? Have you ever had to buy something or purchase something and then send it back to your new employer? Ask yourself, does this make sense? And if they're asking me to make a purchase, if I'm out the money later, will that be a problem? A legitimate employer should not be asking you to do something like that. Lastly, don't click on suspicious links or open email attachments from unknown senders. If you receive an unsolicited offer that seems too good to be true, it most likely is. Just opening an email or clicking a link can compromise your personal data. Before we move on, I want to highlight the fact that these are all absolutely true as you're facing financial hardship, or as you're considering how not to face financial hardship. These are all true in good times as well. All of these points are always something to keep in mind. So, keeping this recent uptick in fraud in mind, it's especially important to keep a close eye on your accounts. At Redwood Credit Union, we love our online and mobile banking services. They let you quickly and securely check your accounts to ensure everything is in order. And most importantly, you can do so without ever leaving the safety of your home. Check with your financial institution, if you're not already engaged in these options, to see what their online and mobile banking services look like. For streamlined convenience and maximum experience, we encourage you to sign up for online banking with your financial institution. With most of these services, you can view account balances and transactions. You can access electronic statements for potentially years in the past. You can transfer funds and so much more from your home computer or laptop. Mobile banking, you can enjoy all of the capabilities of online banking right from your mobile device, tablet, or smartphone. Plus, using mobile deposit to conveniently deposit checks and send money to family and friends. If your financial institution offers that service. At RCU, we call this RCU Pay. You can also set up one-time or recurring payments with bill pay. Skip the costs of stamps and envelopes and just set it up through bill pay, a one-stop, one entry point shop to get all your monthly bills paid. And with card alerts, you'll receive notifications about credit or debit card activity via text message or email to help you spot potential fraud. We want to be proactive with that. You know what you're doing with your day. We know what it says in your account. Let's make sure those things match up before fraud becomes an issue for you. So I know that I just provided you with a lot of information, and it all may seem overwhelming right now, as so much does. But know that you should always have a trusted financial partner you can count on. Your financial institution should always be a partner to you, even more so during difficult times. Where you bank matters. Though it's hard to picture, one day we'll emerge from the COVID-19 pandemic and life will begin returning to some sort of normal. Until then, financial relief products can offer the help you need whenever you need it most. You have the right to expect assistance from your bank or credit union as your banking partner. Here are some ideas of how they may be able to help. Whether you need lower payments or you need to gain some extra cash, or maybe both, your financial institution should be able to help you get what you need without hassles or headaches. If unexpected expenses have popped up, a low-rate credit card may be helpful. A lot of people do not think of credit cards as a tool, but during financial hardship, they absolutely can be. Find out what type of rates and offers your bank or credit union may have. Next, consider driving down your current auto loan payments with a simple refinance. This can be a much quicker process than it used to be. Then, it's possible that your bank or credit union is currently allowing early withdrawals from high-yield savings accounts, like CDs, without fees or penalties. If you have some of these higher level accounts, check with your financial institution and see what opportunities are available for you to take advantage of if you need to. With that, we're nearing the end of the presentation. I'd like to take a moment to remind you of just some of the resources available to you at Redwood Credit Union. Our partners at Balance are here to offer one-on-one support. They're available all year long in good times and in bad. They deal with the very positive things in life and how those things affect you financially, and then the less desirable things in life and how to position you in a way to best absorb any impact. Our online financial wellness center is filled with educational resources that can be found at redwoodcu.org. We've taken a huge effort to make sure that those resources are available to you 24/7 and that they're there for you exactly when you need them, with a variety of different topics to make sure that we're covering what it is that's important to you. We also have a team dedicated to financial assistance. They offer case-based support to help people through times of hardship. If you'd like more information on these resources or any others, please don't hesitate to reach out. We are here to help. And of course, inquire with your financial institution to see what benefits and support they may be offering to help you navigate these challenging times. Thank you so much for joining us today. We know that the COVID-19 pandemic and any time of financial hardship can be so stressful and difficult to navigate. In proud partnership with Sonoma State, we're committed to enhancing your financial well-being and enriching your life. As Tiffany mentioned, there will later be a survey sent out, including a recording of today's session and further resources. Included in those further resources is an ebook featuring all of the information that we've covered today. If you'd like further look at financial resiliency, please also be aware that we do have a webinar happening this evening with NBC's Today Show financial editor Jean Chatzky at 6:30 p.m. this evening. If you would like to register, please feel free to do so at redwoodcu.org. We'd love to see you there. With that, I'm going to turn it back over to Tiffany, and thank you all so much.
Great. Can you hear me okay, Ren?
Yes.
Great. Well, thank you so much. This was very good information and helpful. I even learned a couple of things, so thank you. So go ahead. I see one question came in already in the Q&A. We also have some questions that came in prior via email. So I thought I would go ahead and get started, Ren, with some of the questions. So someone asked, how much should we have in our emergency fund? And what goes along with that is, if there is a second stimulus, what is the best way to utilize that stimulus?
Those are really great questions. So, you know, as mentioned, most financial experts recommend 3 to 6 months of income to be in your emergency fund. For a lot of us, that may not be super realistic. As mentioned, any amount is better than nothing. And really, it kind of depends on your lifestyle, your family, and what the financial hardship is that's going to require the use of your emergency fund. So that's really a very personal question. And I think that that's probably why there is that gamut of 3 to 6 months. That's quite a difference, and it changes from person to person. Basically, my overarching answer to that is save what you can, make goals, and once you achieve that goal, make a bigger goal, and take joy and take pride in achieving those goals. Whatever you don't use in your emergency fund, it will still be there. I mean, wouldn't it be great if we didn't need to have an emergency fund, but you had that money anyway? So it really depends on your particular situation. You know, just the general wisdom is 3 to 6 months of income. Right. Oh, and then, sorry, the second part of that question. Was, what should we do with a second stimulus if that happens? Again, a very personal situation for each. Primarily, first go through your finances and figure out, where are you behind? If you're behind, prioritize those things, both in terms of what items are you most behind on, and what items do you need to be able to move forward in your life. Of course, you know, if you're 2 months behind on your power bill, you probably want to pay that up pretty quickly. So on and so forth. If you're not behind on things, go ahead and consider the upcoming bills that you know are coming. Also, those inconsistent bills that, you know, tend to sneak up. If you've got registration on your car coming up, you need to think about that proactively, and then maybe set aside money for that, because that's a bill that's maybe not usually included in your budget. It should be, but it may not be. So considering where you're behind, how you can be prepared for where you are, and how you can be proactive and prepare for what's coming is really great. Beyond that, you know, if you're pretty comfortable, if you feel quite secure that you are up to date on your bills and you will be able to handle the next several months of bills, then with that, when it comes to what some of us might consider windfalls, you know, if you really need this money, it may not be a windfall, it may be necessary funds. But if you're in a decent financial situation as it stands, then kind of splitting that up, figuring out what your priorities are. You know, maybe a certain amount of it goes towards paying down extra debt. Maybe a certain amount of it goes towards saving your emergency fund savings. Maybe a certain part of it goes towards goal savings. And you know what? If you can, I'm a big advocate for budgeting for fun. We need to be able to have some enjoyment where there's a couple dollars worth that can be had. So consider those things. Sit down, take a deep breath, and look at your life and ask, what are my priorities? And when we know the amount of that stimulus, or if it's happening, then you can prioritize the funds in a way that's meaningful to you and your family.
Great. A couple of follow-up questions that came in. When you're talking about 3 to 6 months of savings for an emergency fund, can you elaborate? Are you talking net income? Are you talking gross? What are we talking?
Yes, generally we're talking net income. A lot
Great.
of those deductions, that's going to be handled elsewhere, either through that unemployment or whatever you're having to take advantage of during your time of hardship. So really you're looking at what are the monthly expenses that you typically have to pay out of pocket.
Great, thank you. So another follow-up question from Maricela was, how does starting an emergency fund at the credit union differ from starting one at a company? And I guess an example would be Primerica or some other external company.
Okay, I'm not specifically familiar with Primerica, so I'm going to put that out there to begin with, but doing so at your financial institution where you currently hold at least some, if not the bulk of your financial relationship, will make it just kind of an extension of that relationship. Hopefully a little bit easier, a little bit smoother of a process, rather than branching out to a whole new organization potentially with this very important aspect of your financial life. So while a lot of people, a lot of experts, and to an extent I agree, say, you know, out of sight, out of mind, you know, do it in a different place. Being able to have an account that is dedicated to your emergency fund is absolutely important, but you want to make sure that you do it at a place that you're comfortable with, that you understand the accessibility of those funds. So some of those, you know, organizations that you don't have an ongoing relationship with, if you don't understand the process to access your funds or to get them in there even, that could hinder your mental capacity when you're handling a financial hardship. Your brain is just inundated already. You want to make it so that it's easy enough to access and that you understand the processes almost as second nature.
Great, thank you. So any tips for paying off student loans?
You know, I would love to say that there are tips with paying off anything. I mean, there are strategies, most certainly, but student loans in general, depending on your particular situation, student loans are not the worst type of debt. They tend to be on the lower interest side. So absolutely kudos for wanting to pay that off. But the strategies for that kind of fall right in line with strategies for paying off all your other loans. Take a look at your debt picture altogether. Look at your balances of all your debts. Look at your interest rates of all your debts. And then I'd recommend looking up, if we have time, I'm happy to go over it, but I'd recommend looking up snowball versus avalanche debt. And that will describe two different ways to approach paying down debt in general. Both of those, well, depending on your personal situation, both of those may lead you to realize that other debts may be more important to pay off quicker than your student loan debt. But other than that, it's just a matter of being vigilant, being diligent, making it happen. And as with all debts, if you can, pay a little bit extra. It's amazing what an extra $10, $20, $50 a month can do. I know that's difficult when we're talking about being in financial hardship, but those additional amounts can save you so much time and money in the long run.
Great. So next question, what if your job doesn't offer a 401k? What options are there to start saving?
Absolutely. So the standard options outside of a 401k are traditional IRAs and Roth IRAs. I don't want to get too far into the weeds here, not knowing the personal situation of the person asking this question. But essentially, the difference between those two types of accounts is that traditional IRAs are pre-tax dollars, whereas Roth IRAs are post-tax. So it has tax implications, excuse me. And you know, if this were a one-on-one conversation, I'd be a little bit more comfortable going more into depth. But that's the basic. If you're interested in those products, speak to either a tax advisor or on a more general level, anybody at your financial institution. They'll be able to go deeper in depth about why you might choose one over the other and the implications of those choices.
Good, you can never start saving too soon.
Absolutely.
For retirement, for sure, right?
Yes.
Let's see. So here's another one you talked a little bit about, but maybe you can elaborate a little more. If someone lost their job recently due to COVID, is it better to get a personal loan or a credit card to help with any income shortages?
That's a really interesting question, because outside of difficult times, it's just kind of like, ooh, you know, you don't usually want to use lending
Right.
or credit to support your life, but we're not talking about normal times here. So given those two options, I would generally say credit card. My inclination toward that comes from generally credit cards are slightly lower interest rates than personal loans. Also, as you pay them back, that money becomes re-available to you, whereas most personal loans are close-end, meaning you cannot re-borrow. Plus, hopefully, you know, if you get a credit card, that's something that'll be a tool that you can keep long after the hardship has passed, and that's a new relationship and potentially a new tool within your emergency fund toolkit that you could use into the future. So kind of overarching answer here is stay away from getting into debt as a means to support your life. But if necessary, generally speaking, I would look at a credit card. However, keep your mind open, look for legitimate offers, make sure that you understand the components of whatever it is you're looking at getting into, and only you know what's right for you, yourself, your family, and any trusted financial advisor that knows your particular situation.
Right, right. Great input and thoughts there. So here's another great one. I've been saving through my savings and money market account. So I've been doing that. What's next? What's another good place to save money?
Oh, I love it. I love it. I especially love it because we're talking about saving and the positive and how to take the next step rather than, oh my gosh, I'm in so much trouble here. I love that some people are able to be forward thinking. It's very exciting to me. Anyways, so saving money market, usually the next step would be a CD or a certificate of deposit. This is just as money market is a kind of a step up from savings. Next, we have CDs. Just as money markets have a couple more restrictions than a regular savings account, or may have a couple more restrictions, CDs have a couple more restrictions. Typically, CDs are timed deposits, meaning that you are committing your funds for a certain amount of time, usually at least 3 months, typically up to about 5 years and anywhere in between. Not only that, but most CDs do have a minimum balance to start those CDs. Varies from financial institution to financial institution, but let's say usually the minimum is around $1,000. So you put that money in, that committed amount of money in for a committed amount of time, and the interest rates are largely increased from a savings account and potentially also a money market account, because you are committing to not touch that money. You can't put money in, you can't take money out. So that way you're committing that. With that, especially as we're talking about financial hardship, you know, what if you do find yourself in hardship needing those funds and you're thinking, well, you know, this was my emergency fund. I need those funds now. Typically, when it comes to breaking a CD prior to its maturity date, that predetermined time that you've invested it for, if you have to break it prior to the maturity date, and this is something you'll want to check with the financial institution that you open the CD with, but oftentimes the penalty will only be the interest that you could have earned. Fairly rarely does a penalty for breaking a CD early actually impede on the principal that you initially invested. It's simply, you broke the agreement. Now, instead of earning $45 in interest, you'll only earn $20 in interest. And that's how that penalty works. So your next step would be a CD, but make sure that you're aware of the accessibility and how your CD works, the maturity timeline, and the minimum amount required to begin that particular type of account.
Great. Let's see, we have a few more minutes. I have 2 more questions that definitely have come in, and if there's anyone on the line still who is thinking of any last minute questions, feel free to drop those in the Q&A. The next question we have is, what are the best apps to use for money management? You know, we're all in this virtual space right now, right? We're using technology even more than we did prior to COVID, in my opinion. So do you have any tips or best apps or where to find this information?
Absolutely. Okay, so a couple that come to mind right off the top of my head, mint.com. You know, everybody seems to at least know that name. That right there means typically know the name and have some kind of understanding of what they do, and not you say the name and it's but the fact that most people know the name means that it's a well-known site, means that it's not, there's very little chance of it being fraudulent or being any kind of risk typically. So mint.com is really great. They do offer a free version. and it's a very user-friendly yet detailed interface, so I really like them. The one thing that makes me a little bit nervous about Mint and so many online resources for budgeting and money management is that you do have to grant them access to your financial accounts. I just tend to not like to put in my routing number and account number in more places than I have to. So, you know, that's a little holdup there. But I've never heard of them having a breach or anything that causes so much concern that I hesitate to recommend them. Another one is YNAB, stands for YouNeedABudget.com. There is a small fee. I believe it's an annual fee, but again, very friendly user interface, tends to be really great for first-time budgeters. It's got a really nice feel to it. That being said, if you're looking for more particulars, a big resource for me is nerdwallet.com. I believe they actually come out with an annual listing of their top 10 mobile apps for budgeting. So every year you can kind of get an update of what they're recommending, and NerdWallet just has a really fresh take on things that are happening here and now. It's not so much based in the past, it's really what are we going through right now. All that being said, especially with my reticence to put in my own personal information into outside sites, check your financial institution. Your online banking may have a budgeting tool. Some of those are really great, some of them not so much. I know a lot of them are really ramping up right now. You know, you might have seen commercials about different financial reminders. I know a lot of financial institutions are moving in that direction. And then that makes it so that you don't have to input your information into a third-party site. It's at the place that already has all of your personal and financial information. So before you go out and about wandering the woods for what you can find, see what's already at your fingertips. Ask your financial institution what if they have some kind of budgeting or money management platform, and maybe to give you a tour.
I think that's great because, yes, as you know, if you go on your smartphone, you can find so many different ones. And I think just knowing which ones are credible, it's a good point. Go to your financial institution for that. Okay, I think we have time for one more question. And this one's interesting. Can you talk a little bit about the coin shortage and what that means to us, if anything? I mean, I think you see it at different retailers, restaurants that you visit, especially in the last couple months. So can you talk a little to that?
Absolutely. The coin shortage is an interesting thing because it's not actually a shortage. You know, the coin didn't just up and disappear one day. It's that those businesses that deal largely in coin are not open right now. So it's not a shortage, it's a circulation problem. Those coins still exist. They're just in people's bowls at home, in their, you know, old water jugs, so on and so forth. So, you know, if you have those, and especially if you're dealing with financial hardship, take those coins in, cash them in. That'll give you a little influx of cash and get some of those coins back in circulation. So, you know, once this whole thing is over, as I think we've all been saying for the last 5 months, this shortage will disappear, kind of like the coins did, because they'll just take each other's place. What it means for right now is that stores, purveyors, they are really going with card-based transactions, contactless payment. So it's really bringing forth the necessity to have some type of financial institution account and ways to access that money within your account. It's really highlighting the need for people to be banked and to have ongoing relationships with their financial institutions so that these daily needs and financial aspects can be tended to. You know, if for some reason opening an account or using your account is not an option, you can absolutely look at purchasing one of those prepaid cards. There are several things to be on the lookout for there in terms of what are the costs to implement that card. Are there monthly costs on that card? Make sure that you look at that fine print, because that is a business. It's not just, I'll give you 50 bucks and you give me 50 bucks. No, they are a money-making entity. No fault of theirs. It's what it's aware of. And even just purchasing those cards, a lot of retailers are saying we can only take card or exact change. So that's something you're going to need to take into consideration as you consider, I'm going to go purchase dinner for my family, or I'm going to go purchase a pair of pants that I need for work, or what have you. How are you going to approach those things? So it takes these things that were once everyday non-problematic issues. Oh, I'll just get change for my 20 bucks. Not so much. And a lot of these retailers aren't able to even just, where you say, oh, just keep the change. I don't need the change. They're not able to do that because that messes up their end of night balancing, especially when it happens 100 times over. So it won't last forever. It just makes it all that more important that you're conscientious of what purchases you're going to be making in the day, in the week, and potentially beyond.
Right. Great. Well, I think it's 1 o'clock right on the dot. We timed that well, so very good. Ren, thank you so much for providing this oversight and, really good detailed information about financial wellness, especially during this time. I think it was some really good information. I want to also acknowledge several people, when they registered, put in topics for future financial sessions. So we appreciate that. We'll be evaluating that as well. As Ren mentioned, we'll be getting the email out, and it'll have also the additional financial wellness session that Redwood Credit Union is doing for their members this evening. And there'll be information if anyone's interested in joining that this evening. So we'll put that out, as well as the survey. We'll get that out later this afternoon. But we appreciate everyone spending this hour with us, and it's great connecting with so many people. Look for our additional sessions coming out and ways to connect our alumni back to Sonoma State. So thank you, everyone, for joining us. Thank you, Ren. Good seeing you.
Thank you all.
We'll talk soon. All right. Take care.
Bye.
Bye-bye.